So what's been the reaction to this new wave of debt sales, first of all?
Yeah, in part, it's exactly what you've been talking about today, Nara, and it's the steepening of the yield curve becoming the consensus trade. But to understand why that's the reaction, you have to look at what exactly is being sold, because at first glance, it doesn't totally make sense. You think that in times of a pandemic, investors would want those longer dated bonds for security. However, the Treasury is reintroducing the 20-year auction, for example. It's going to auction about $20 billion worth of that on May 20th. Today, we get 10 years. Tomorrow, we get 30 years, about $22 billion worth. So investors are looking at the bonds that are coming to market and saying, okay, there's this huge duration risk that's now coming to fruition. That means I'm going to insist on a higher yield for those further dated bonds. And that's exactly why we're seeing this action of the yield curve continuing to steepen.
Yeah, the reach for duration. Let's talk about the issue, because it's not just sovereign bonds, though. You've also been looking at the record issuance of European corporates.
Yeah, Manis, this has been really remarkable. Corporate bond issuance is booming. Even though these companies basically don't have sales, they're still tapping the bond market because in the meantime, they want liquidity. They want to short liquidity to make sure they can weather the pandemic. So when we look at April sales, the issuance was staggering. In investment grade alone, over 65 billion euros worth of bonds, more than double what we saw in prior years. So this is really staggering. And what's part of what's aiding the companies here is the ECB stepping in to assist companies. They're able to get cheaper debt. There's the PEPP program, which also allows companies to better bring these to market. And there is speculation also that the ECB might even start buying fallen angels because companies have seen more downgrades. So this sort of environment is really rich for companies who want to issue debt, who want to get liquidity, and they're doing so at a very rapid and in some cases record rate. Nara, Manis?